Hello like-minded traders, you're looking at the euro dollar on the daily and we have just come into structure lows and I'm looking for a reaction at this zone first of all, and I want to talk you through what I'm looking at. So let me just clear off my workings out, and we're going to go from the dailies all the way down to the 5 range so we can get a good view of what's happening here. I'm only looking for a small correction in the market, but as you can see here the market has come down and we have now triple tested this area, making this at this stage major support once, twice, and we've just come down here again and tested for a third time. We could also look at the market starting to coil. So 3 tests at the bottom, the market came down, up, down. We could be seeing the market go back up again, and I'm going to talk about this as we drop down the time frames, and target 2s is going to be within this trend line, and that trend line will change because it's dynamic. It just depends if we rally straight up or down. So let's crack on and see if we can talk our way through this these particular trades. So I'm going to put a trend line here, and as you can see, pretty much like the dailies, tested. This could be considered a false breakout. The reason why is we broke structure, a very bearish move, and then instantly we had a very bullish move, and that move was a higher high, higher close, so that could be classed as a false breakout. And then as we look over here at our double bottom, we tested once, we tested again, we have divergence, and on the 4 hourly we haven't closed yet, but we've broken above the B point of the double bottom. So go down to the 60. Now I'd actually been waiting for a double bottom down pretty much anywhere in this zone, and what happened was we retraced a little, and I knew at that point I wasn't going to get my conventional double bottom. And if we look here, on my data, we never actually got it. We actually closed below this spike low, invalidating my double bottom. However, what we have done since then is we have we have rallied and put in a new structure high above this. So on this time, on the 60-minute, it doesn't look like there's a great deal here, and that's why I said at the beginning that we have to really drop down to the 5 range. Just to show you the 15-minute, and then I'm just going to go straight to the 5 range and show you. Now the double bottom for me wasn't in play. However, if we look at what we have done here on the 5 range, unfortunately when we drop to the 5 range, that a lot of the workings out on say the 60-minute just don't display. I don't know why that is, but if you look what we've done here, left shoulder, new structure low, right shoulder, violation. I'm going to move the structure level up to here, and look at what we see here. Structure came up, we saw a little bounce, and from there we have now made a new structure high. So we have a potential, well, we have a head and shoulders, we've got a potential rotation, and I'm now looking for the market to come into this kill zone. Note that up as kill zone, and then I will be looking for an entry reason, and if we get an entry reason here, I'm going to want to be at least 10 pips below this level, giving me 55. I may even go a couple of pips extra, because my targets that I'm playing for here are I'm going to have a very good risk to reward, so I want to make sure that I give my stop loss more than an ATR and really plenty of room to breathe, particularly when we're dealing on the range bar chart. Sometimes we do get slippage and bigger movements than we just simply may not hold the structure level before coming down and rallying on up. So that's the 5 range. Let me go back to the 60-minute. Now, if this was to play out, then I would be looking for initial targets on the 60 at, what area was I looking at here? Okay, we put a couple of arrows on here, 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 here. So we've got a zone there. It comes in at 116.20. Let me look further left. Yep, we have more. Oh, arrow pointing the wrong way. There, a little bit here, and there as well. Okay, so not a bad area. It's not. We don't have a clearly defined excellent structure zone. But if we see a retracement here, I'm just going to throw on a fib. If we see a retracement into this zone, I can put a fib onto here, and that comes in just above the 127. Those of you that ever watch my videos, you know that I like to take targets at the 127, or that's the earliest point that I take targets, simply because the 127 is the extension before we really see a major retracement. Whereas if we get up to the 1618, that's classed as the golden means. That's really where, if we get to that level without any retracement, we're really going to be overbought, and we're very likely to see a reaction. So I want to get my profits out the market, and at that point I'll move to break even. And so this is going to be target 1s. Target 2s is going to be this potential trend line I was talking about. Use the right tool, F6. And the reason I'm looking at this as being a potential coiling action really is because of the number of tests that we've had within this lower VS1 zone here. You know, 1, 2, 3, 4, 5, 6, 7. We came down again. 8 tests. So on the higher time frame, go back to the 240, you can see it. This is a major level that's holding. We've had an initial bounce and a retracement. So second targets will be this trend line. Depending what happens with price action, if price action goes straight up, well, that's where I'll take targets. If it meanders sideways, you know, it does a little bit of this action, well then targets are not going to be as good. We will wait and see. This may not even be forming a potential wedge pattern, but it's something that I'm going to play for. We won't know until it happens, that's the saying. So I'm going to pause the video now, see if we get filled, and then show you the trade as we go along. Well, good morning guys, this is the second part of the video. Time now is 7:10 the following day. And here we are back on the euro dollar. Want to show you the outcome of the trade that I was recording. I'm just going to go back to the 5 range. Unfortunately, I deleted all my workings out. So I actually have written here where my stop placement was. I was actually stopped out of this trade, I believe, by not even a pip. I believe it was dead on the line. When I watch the video back, I'll double check that, but I have written here in my trade log 155.50s was my stop. So this is what we were looking at here. Let me just draw it out for me. Left shoulder, head, right shoulder, violation, there was the violation. We had a little pullback. Oh good grief, use the right tool, Chris. And then to get long, and I believe 155.50s were here. And thank you to the news, it came down and the spread got me on the euro dollar. The spread I think is at 0.2. And from there I'm just going to go back to the 60, and from there you can see what happened then is we rallied up, came back down to retest, did not even touch this low here, and then rallied up to hit would-be targets, which were here around this area. Would have gone for those, would have been there around 160.19, and then we rallied on to hit our trend line. So minus 28 pips for me. Thank you very much, Mr. News. However, the analysis was correct in every way. Stop placement I put further than an ATR behind. I typically do on this type of trade because of the risk to reward, and we missed out on around 40 pips to target 1 and around 107 to target 2. A bit sickening, but nevertheless, pat myself on the back for everything else being right, just literally stopped out by the spread.